The IRS collected over $68 billion in enforcement actions last year alone, and freelancers were one of the top targets. Not because they cheated, but because they made 5 very common, very costly mistakes. If you earned any money as a freelancer in the US on Upwork, Fiverr, as a consultant, or side hustler, there's a real chance you're making at least one of these right now. Stay until mistake number 3, because that one alone could save you over $1,000. According to the IRS, self-employed individuals account for a disproportionate share of the US tax gap, the difference between taxes owed and taxes actually paid, which now exceeds $600 billion annually. The system isn't designed to automatically protect you the way it protects a salaried employee. Nobody withholds your taxes. Nobody reminds you. It's 100% on you. Here's the problem. The entire US tax system is built around W-2 employees. Your employer withholds taxes. Done. But freelancers? You're handed raw income with 0 withheld. And if you don't know the rules, the IRS will find out before you do. These 5 mistakes are the exact reason freelancers get hit with surprise tax bills, penalties, and in some cases, audits. Mistake number 1, not paying quarterly estimated taxes. Mistake number 1, and this is the most common, is waiting until April to pay your taxes. As a freelancer, the IRS expects you to pay taxes 4 times a year. These are called quarterly estimated taxes. The 2025 deadlines are April 15th, June 16th, September 15th, and January 15th, 2026. Miss them? You don't just owe taxes, you owe a penalty on top of that. The IRS calculates this using the federal short-term rate plus 3%. In 2024, that was around 8% annualized. The fix: use IRS Form 1040-US to estimate and pay each quarter. A simple rule: set aside 25 to 30% of every payment you receive and pay quarterly. Done. Mistake number 2, forgetting the self-employment tax. Mistake number 2 is forgetting that freelancers pay double the Social Security and Medicare tax. When you're employed by a company, your employer covers half of this 7.65%. The other half comes from your paycheck. As a freelancer, you pay both halves. That's 15.3% on top of your regular income tax. So if you made $50,000 freelancing, you owe $7,650 in self-employment tax alone before a single dollar of income tax is calculated. The fix: here's the part most freelancers miss. You can deduct 50% of that SE tax directly from your gross income when you file. That's a meaningful deduction most people leave on the table. Use Schedule SE when you file. If your net freelance income is over $400, this form is required. Mistake number 3, not tracking business expenses. The $1,000+ mistake. This is the mistake I promised you, and it could genuinely save you over $1,000. The IRS allows freelancers to deduct legitimate business expenses from their taxable income. But most freelancers don't track them, so they pay taxes on money they didn't have to. What qualifies? Think: your laptop, your phone bill, business use percentage, subscriptions like Zoom, Canva, or project management tools, professional development courses, client meeting meals, 50% deductible, and your home office if it's used exclusively for work. If you spent just $500 a month on deductible expenses, that's $6,000 a year you don't owe taxes on. The fix? Use a free tool like Wave, or a paid one like QuickBooks Self-Employed. Connect your bank account. Categorize every expense. Do it monthly, not in March when panic sets in. Mistake number 4, misunderstanding the 1099-K rule. Mistake number 4 is assuming that if you didn't get a 1099, the income doesn't exist. Wrong. The IRS requires you to report all freelance income, whether you got a form or not. Now, the 1099-K rules have been changing. For the 2024 tax year, filed in 2025 payment platforms like PayPal, Venmo, and Stripe are required to issue a 1099-K if you received more than $5,000. That threshold is dropping to $600 in future years. But here's what catches people. Even below that threshold, you're legally required to report the income yourself. The fix: keep your own income log. A simple spreadsheet works. Record every payment, every platform, every client. Don't wait for forms. The IRS doesn't. Mistake number 5. Missing the QBI deduction. Mistake 5 is one of the most powerful deductions freelancers ignore. The Qualified Business Income Deduction, or QBI. As a self-employed individual, you may be able to deduct 20% of your qualified business income before taxes are even calculated. So, if you earned $6,000 freelancing and qualify, you could reduce your taxable income by up to $12,000 without spending a single extra dollar. And here is the big update. Congress just made this deduction permanent in 2025. It's not expiring. It is not going away. This is now a long-term tool you can use every single year. Starting 2026, there is also a new guaranteed minimum. If your QBI is at least $1,000, you get at least $4,000 deducted, automatically. The fix: file as a sole proprietor or single-member LLC. If your income is under $200,000 as a single filer, you likely qualify for the full deduction. Use a CPA or tax software like TurboTax Self-Employed. It calculates QBI automatically. I hope that you understand. This video is for educational purposes only. Please consult a licensed tax professional for advice specific to your situation. Most freelancers overpay the IRS simply because nobody taught them these rules. Now you know. If this helped you, drop a comment below with which mistake surprised you most. I read every single one. Subscribe to FinAction for more US freelancer money tips.